Like I remember the requirements. It was effectively my first sample of due diligence.
Right.
And due diligence, I wrote about it in the book. It gets its own section. It's called Due Diligence Sucks because it is an awful, awful experience. And I think we just said to each other at that time, we may as well just go and try to get more customers.
Yeah.
From scrappy founders to 8-figure success stories, we're busting startup myths, getting raw insights from market-tested entrepreneurs, and revealing the proven playbook for bootstrapping your B2B startup to 5 million. This is the Startup Different podcast.
Hello, folks, and welcome to another episode of Startup Different. I am David Singleton. Here is the fabulous Chris Singleton. Chris.
Hey, Dave.
What's up, man?
I'm great.
I didn't ask you how you were. I said, what's up?
Everything is up.
Okay. All right. We're doing great here at Startup Different. I'm freaking out. Dude, we just had an awesome, last week, I guess, we had an awesome conversation with Jane. Crowell, which was really, really cool. And pretty interesting business. Also interesting it's out east. I'll just say that for starters.
Yeah.
I thought it was interesting that it was out in Halifax and that I've heard a lot about this like budding like entrepreneurship community out there. But it's kind of interesting to hear that firsthand from people who are actually like there
in that space.
You know?
Yeah,
So that's pretty
absolutely.
cool.
Particle Capital. Just want to drop the name so that people
Particle
know
Capital,
what we're talking about. Very interesting. And again, this was one of these things that we do not still are learn. Well, I guess we're learning about it. We didn't know a lot about it when we ran our business because we bootstrapped and we really didn't go down the road of raising any money, whether it be through, investors or whether it be like some sort of a loan type of approach or something like that. But so it was really interesting.
I thought you asked some pretty good questions, actually.
Oh, thank you. Yeah.
Yeah, finally you showed up.
I know.
There's certain episodes where I'm not sure you've said a word, so it is kind of nice to see.
But I said the important things.
Hey, I'm Chris, and see you later.
I think it was a bit better than that.
Sorry, that's not fair. I'm sorry, Chris. I really enjoyed that episode. So first off, she's just a cool person. Yeah. I want to start off with one of the more impressive things, which she got the Spaceballs reference, and she one-upped it with the password for the luggage, the shield around the planet that has the air. 1, 2, 3, 4, 5. Oh God, that's That's nice. Yeah. That's a nice win for everyone because that really could have gone nowhere.
People who know Spaceballs references have a very special place in our hearts.
Yes. If you know, you know. I realized I didn't actually include any Spaceballs reference in the book. I should have done that. I never got a chance to do it.
Yeah,
I had Star Trek. I had Zoolander. I covered a lot of Simpsons, a lot of memes. Yeah. Covered some good bases, but never got to Spaceballs. That's kind of an annoying movie, to be honest. Like it's fine, right?
It's a really funny movie.
It is funny, but it's a lot. It's a lot. Anyway,
right. Well, maybe the sequel to the book, you can talk about combing the desert or something like that.
Combing the desert. You find anything? We ain't found. Anyway, this is a children's program. Can we swear? I'm not sure. We've had some guests swear sometimes. I'm not really sure if we're allowed to or not. Anyway.
Producer Graham's going to have to bleep that out.
Yeah, can we bleep that? Graham's on it. Okay. Hey, Dave here. Let me tell you a little secret. When we were building App Armor, we needed to move fast, especially with quotes and invoicing. FreshBooks made that possible. Yeah, this is an ad, but seriously, FreshBooks was essential. My sales team could send sharp quotes in minutes, and it automatically handled millions in invoices and reminders. No chasing, no stress, just cash flowing in. It was so easy to get paid. It's built for small businesses by folks who get it. And yeah, like us, they're Canadian. What's not to like? If you want to spend less time on paperwork and more time growing your business, head to freshbooks.com and start your free trial. Trust me, it's a game changer. And now, back to the show. Okay, so let's talk about Particle Capital, cool business. So the idea is kind of like automating the process of getting funding and whatever funding option you go for, as far as I understand. So if you're going for like venture capital, if you're going for PE, or if you're private equity, you're going for
this was really interesting.
The
because
retail
it's like
investor.
A one-stop shop to whatever type of funding you need. Here's a place that can help you find it.
It's pretty cool, and she had a lot. Her depth of knowledge in this space is obviously quite significant. Yeah. Very, very impressive.
I'd like to contrast it with at first I thought she was saying reggae. but it was Reg A.
Like regulatory A.
Yeah. And I like this shows how
it was actually a pretty technical interview. Like we
Yeah.
didn't get a chance during the interview to be like, what is a Reg A versus a Reg D or whatever.
Right.
Do you even know the
I
differences?
don't know the difference between those. So like,
If you know the difference, let us know and comment on this video for the love of God.
Yeah.
But it was
what I thought was really interesting is that obviously she did.
Yep.
So like us novice, like we knew our business, we knew how to write software, we knew how to do our stuff. The whole funding thing is a mystery, and it's very interesting to be able to approach an organization like that is so well versed in that space.
I think the idea is that it's basically like navigating certain levels of like regulatory requirements, right? And why you would work with an organization like them is just they will help you find the right tool to get the right amount of money or the right instrument, like bureaucratic instrument, almost to get you the right amount of funds for your business.
Right.
So you feel like you're in pretty good hands. But one thing, the whole premise though of that business is that finding funding though is a full-time job.
Yeah.
Which I thought was pretty interesting. And I wanted to dig a little bit deeper and I got a little bit there, but like what was your hot take on that? You know?
I know we just barely went down the road of funding, and we realized that we thought it was easier just to get more customers.
Yeah.
And so yes, I would definitely agree with her that finding funding is a full-time job.
You know, I remember it was like a million years ago, but we did like this presentation. It was like a closed door presentation hosted by a major university, and they had these very wealthy, I don't know, like alumnus or alumni or whatever, people that were there. And that had successful businesses and were looking to be angel investors in just stuff. They were looking to diversify. And I remember we made a big deck, and we do you remember this at all?
No, the total blank.
You were
When did we
there,
do
man.
this?
That's when we made the newsreel video. We made it for that. Do you remember the? So we made this video that was like all the news stories about our mobile applications that had been done out in the world, and it was really cool. It was really compelling and interesting. Anyway, so we did it for that presentation. You made it for that.
Yeah, I remember that.
Anyway, so we was in like an auditorium. Anyway, so we did the presentation. We actually had, I don't even remember his name now, to be honest, but we had some guy interested, and we were kind of going down this road. And there were two things that I really didn't want to do. One is I didn't like the idea at that stage of our business. We were like pretty profitable, and the amount of money we were talking about wasn't actually. It was increasingly less significant.
Yeah.
Like quickly less significant.
Yeah,
It wasn't $1
yeah.
million bucks. It was like $500,000 something we were talking about.
Yeah, and we were kind of getting out, like we were getting too big for like an angel investor.
Yeah.
right.
Yeah,
It
or
didn't
like,
make
or
sense.
at least for that level of investment, right?
Yeah.
And so I didn't like the idea that we were going to give up control or like an equity stake because it was going to be like that kind of investment for that kind of sort of nominal amount of money. The second thing was like, damn, it was a lot of work. Like I remember the requirements. It was effectively my first sample of due diligence.
Right.
And due diligence, I wrote about it in the book. It gets its own section. It's called Due Diligence Sucks because it is an awful, awful experience. And I think we just said to each other at that time, we may as well just go and try to get more customers.
Yeah.
The amount of money and the amount of work that's going to take, like, I'm not even sure that money, when you do like your hours required to get that money, you know, shave $100K off it. Like between the two of us, all that effort, like almost guaranteed.
For sure. And then, you know, opportunity cost, we're spending our time doing that instead of getting customers,
exactly.
which
So
is moving our business forward.
It's not only that, and what if it falls apart, right? So this is the other thing. And I think this is the broader notion that one of the reasons, and I mentioned this in the episode, one of the reasons we're so skeptical of venture capital is that opportunity cost is super real.
Yeah.
You going and getting funding is time that is spent there as opposed to finding new customers, finding new market opportunities, being out there. And even as you've heard, loyal listener, as you've heard in our various interviews with certain founders, sometimes the biggest opportunities in their business occurred when they were just talking to their customers, when they were in the meeting, when they pivoted their business based on a customer's feedback in the meeting. You know what I mean? And so I am very skeptical of that very early funding game. However, her business wasn't about finding funding for software companies. And then this is I think that you can still make this work as not a software company, but she's really talking about super capital intensive businesses.
Right.
And I think that's really important to remember. Like, you can't do this without any capital.
Yeah. If you need like inventory or you have like plant and equipment that you need to purchase to make your business fly, like she was talking about like lithium ion battery plants,
like
and
holy,
things like that. Like you're gonna
as soon as there's a factory,
yeah,
you're gonna need some money for that. You can't. People aren't going to accept dry wit that's
Yeah.
funding for that sort of a thing, right?
Absolutely.
So anyway, so I think that was interesting. And I love the idea, though, in that context where you need the money, that you can go to a business like this that'll actually help you find funding in a relatively hands-off way.
Yeah.
So that's pretty cool. I wanted to also, one of the things I thought was pretty wild too, and actually you were shocked during the episode about this, was this whole retail investors piece.
Yeah. Yeah.
So, I mean,
Did I get that stat right? Did she say 50%, 53% of investments
Nailed it. I actually
are,
have 53% of my notes like right here.
Yeah, so 53% of investments right now are by retail investors rather than like institutional
More
investors.
than half.
Doesn't that blow your mind?
It is pretty crazy.
Yeah.
I guess there's, I
More
think,
people-
well, she told an interesting story here too, where, the S&P 500, its projected growth is horrendous. It was supposed to be like 3% on average, right?
Right.
Now there's winners and losers in there. Like that's the index, but the winners and losers, you'll find somebody who'll do, I don't know, 100x or something. Like somebody will have an incredible, 10 years. But I think the general idea is that on average it's worse, right? And if you're only talking about an average gain of 3%, then you're looking for options with your money.
Yeah, your inflation's eating up a lot of that 3% as well. So
And there's more tools too.
Yeah.
You think of the Robinhoods, the insert fintech app. I mean, there's a bajillion.
have you ever seen that? I forget what it's called, but there's like a Netflix documentary about the GameStop.
Yeah. Oh, I love it.
I think it's called like Eat the Rich or something like
Yeah.
that. Yeah. GameStonk.
GameStonk. Yeah. Stonk.
The whole, if you watch that documentary at the end, kind of the suspicious thing is how, what did they do? They stopped.
They made it so you couldn't sell.
You couldn't
Or no, you couldn't buy?
Yeah, you couldn't buy GameStop anymore.
Producer Grant, what is it? Couldn't sell. We got
Okay. According to Producer Grant.
I think Producer Grant was part of that documentary, if I'm not mistaken.
And what was really weird was that Citadel Investments, I think, was the company that was behind it, had some big stake in.
That's right.
Yeah, there's some.
It was
something
all
going
like
on
really
there.
cagey.
And they were also one of the ones that had, I think, shorted that stock the most.
Yeah.
And there's some really cagey stuff going on.
The fund
there.
behind it had shorted it, and they were going to lose much
And then
money.
there's the whole Hello Kitty guy or the
cat guy.
I can't remember what the guy's name. It was like his handle on Reddit or something. But
I think he was estimated to have made like $60 million or something like that on that whole thing.
Yeah, and he was like actually like licensed as like a
He
stockbroker.
lost his license though because of that. Anyway,
Anyways,
it doesn't matter.
very confusing story. So the only thing like when I hear Robinhood, I always like worry. I always think about that. Now maybe things have changed. Probably they have. But at the
I think
same
it's just
time,
functionally though that people are like Robinhood or otherwise. It's just that people are more able to invest in the market than they ever have been.
Yeah,
it's more accessible.
I think that's like Robinhood's thing is like democratizing investing.
I think the base concept. I mean, forget like your Quest trades. Forget your like these like larger companies that are like going to manage your whole fund. Instead, what you're seeing is, I think this is riskier for what it's worth, but you're seeing a lot more of like independent, smaller investors who can decide to put in $10, $100, $1,000, $10,000.
Quest Trade
$100,000.
actually is like that. I think what you're thinking of.
This
is
episode's
like,
sponsored by Quest Trade.
I think you're thinking of like the big institutional investors, so like the pension plans.
Sorry, the brokers, the broker, and is another option there too. Yeah. I hear you. Yeah, sorry. But I think that the long and short of it is that it's easier to get into this market. So that doesn't totally surprise me. Yeah. What I never really thought about though is that you could fund your startup from a kind of retail investors.
Yeah,
that's what I thought was
you could
cool.
go out to, and it sounds like that's sort of what they're doing is they're finding these like groups of investors that are looking for better returns, but want access to those startup businesses where, it would be like if you were a single investor, a Robinhood type investor, how do you go and invest in some little startup?
Yeah, it's almost like a syndication of people. You know what I mean? They're getting just a bunch of people together to invest in the thing and they get a chunk of equity. As that group of people, you as one of those investors gets the tiniest slice, but you're part of that, and you get to benefit in that if it ends up being, a really big successful business. Yeah. So that's pretty interesting take as well. A couple other things I thought were pretty cool. I never once, I don't know why, I guess probably because we weren't as into the venture capital game, but I never really thought about how Canadian startups could go to the United States for funding.
This blows my mind as well. I never considered this like really an option when when we were running our business.
Because it's a good deal too, right? For those American firms. Like we mentioned this in the episode. It's a good deal for those firms to pursue.
Just the currency exchange.
Yeah.
There's a big advantage there.
So I suppose if you are looking for funding and you're listening to this show right now and you haven't considered going to the United States, that might actually be a valuable route to take. Like, as we mentioned too, like a Canadian ecosystem for investment isn't great.
Right.
So it ends up being one of those circumstances where maybe there's opportunity south of the border, you know, and the kind of the two-edged sword though, the currency thing is that, well, it depends what your business does, I guess, and how your business is, in what currency your business is predominantly paid. But there is something to be said how, like, okay, if you're funded and it's Canadian dollars, yeah, it's 30% off for an American firm, let's say, because of the currency exchange.
Yep.
But on the other end, when you sell your Canadian business, it depends who your buyer is and what currency that transaction happens.
Yeah,
You know what I mean there? Like,
yeah, it might equalize a little bit.
it might actually net,
yeah.
but I still think that's pretty interesting as an idea. You know, like it really makes you wonder, like how really important is the border when it comes to innovation domestically? That's kind of a weird concept.
Yeah. I don't have the answer for you on that one.
There is no answer. Like, what do you think about that though? Like do you think that's a healthy thing? Does it kind of suck that we have to do that? I don't know.
I always felt like the border was a bit of a barrier. Maybe it's
Wire
less-
transfers are just terrible, is what I think.
Yeah,
of
there's some like
across the
operational
board.
things
Like
that
functionally,
are really
yeah.
annoying.
But that might be biasing us, right?
True. I might have the wrong view of it. And, you know, I didn't know about Particle and how I could access, you know, U.S. Investment, source of investment. I didn't even know about that until our interview with her last week. So now all of a sudden I'm thinking maybe it's less of a barrier now that I know that some of these things are available. Yeah.
So anyway, that's pretty cool. I think that's something that if I ever had a capital intensive business in the future, though, I would definitely seriously consider.
Yeah.
It just seems like, you know, there's a lot of capital in the United States.
Right.
It's 10 times a bigger market. Like there's going to be opportunity there for that. So.
For sure.
What did you think of? And I was a little sad that we got to this at the end of the episode.
Right.
But
right.
is
this the myth?
This is the myth, ladies and gentlemen.
This is in our book as well. This is like one of our faves, I would say.
It's one of the it's kind of a two-parter. So she mentions that. So the myth is that sales isn't for founders. That sales isn't something that founders do, and like that's absolutely wrong. Yeah. And it's something that if you're not good at, you must get good at, or at least you or your co-founder. But honestly, like kind of both of you need to be able to sell your business, like to be able to talk to it, to be able to work through that. Like as I mentioned, even, and I may have written in the book, is that you are a sales, you could sell what we were offering at App Farm. Except you just tend to give away the farm.
Oh yeah.
You
never forget that part.
The running joke, what I remember in the office, was that Chris would pay you to use the software.
Yeah, that was a running joke.
Yeah, it was pretty funny. How about $10, $1,000, or $1,000, $100, $0? I'll pay you. You know, it's like that kind of a bit. You know what I mean? So
we'll pay you to do the work.
Yeah, but
great.
So I think that's really, really important. There's somebody listening today who's got a really good business, a really good idea, and it's not going anywhere. And it's because they're not out there hitting the pavement. Yeah, they're, and it actually ties into another piece she mentioned about relationships. But she's not, or rather, if you think you have a good idea, you've got to go out there and get it. It's one of those things that it's just not going to happen unless you sell. There's some sort of direct sales function at some point in your business, and you've got to make that happen.
This is tough for the product people. The developers.
You, as a product person, you should be like talking to them.
Yeah.
Right? Look right into the camera. Look into this. By the way, these are the new Netflix cameras. Cost approximately the same amount as the 2012
literally
Honda
see the
Civic.
Fear on my face.
Yeah.
You can,
as well as more wrinkles and all those sorts of
those
things.
Too.
Zoom in. Can we zoom in on them really slow? We're getting some nods. Yeah.
So I do think that if I think of myself like 20 years ago when I was just starting off building software products, I definitely was of the belief that the product is so good, it'll sell itself, because every customer is like rational person, like evaluating all the options in the marketplace and doing kind of like the grid and figuring out which product has which feature. And, clearly mine would win because, I built it and I analyzed and all that sort of stuff. And, we've actually had some other guests that have really dispelled this myth as well. Do you remember when we talked to Matt Watson? And his thing was best known beats best.
Yeah.
And so there is something about this like sales, marketing, what people know and how much effect that has on people's buying decisions.
Yeah.
And so here we're hearing it again. You have to be able to go out and sell it. And be a sales organization. Can't just be that, hey, Particle came up with this great way to, access this funding. But if they don't go out and sell that idea really effectively, both to the investors and to the people obtaining those funds, it's not going to be successful. So, it goes back to Dad and the photocopier dealership.
Yeah,
and,
that's in the book for sure.
Yeah,
right?
exactly. That is your analogy in the book.
That's the whole like you're a sales organization piece.
Yeah.
But I do think it's important not to lose in here that it's founder-led sales. There were times that's very, very important. Like there were times in our business too when like I had to do it.
Yeah.
Okay. Whether it was super high complexity, whether it was pioneering into a new market, so that is expanding into like a relevant adjacent market or adjacent vertical, which is incredibly complicated, by the way. Like if you don't do that, or if you pawn that off to someone else, it will probably fail.
That was one of our failures, actually.
Yeah, definitely big
failure. I keep referencing the book, but there is a story in the book about us trying to expand from higher education to K to 12.
Yeah, that's right. So that's like kindergarten to grade 12. Those are education systems.
Yeah, exactly. Which I think we thought, well, education, this should be an easy transition. And actually, it was completely different set of requirements. And, we tried to have a staff member kind of like spearhead that idea. And that was really tough because it wasn't like selling the same thing that we had. We actually had to do a bunch of discovery, and we realized we just weren't that good at it. And there were other players in the market that were good at it, and they were having the same problem in the opposite direction. Yeah. Those players that were in that K to 12 market were having a terrible time getting into higher ed.
Yeah, for sure.
So there's something to be said about that founder-led sales.
Yeah.
And it's not just about the sales part of it, but it's also like the knowing your customer and understanding their needs and understanding the market and that sort of thing. So I guess there's more to the sales other than just the act of selling, but also the way that it shapes how you build your business and where you take your business.
There's so the way we equate this in the book, as I'm sure you remember, is there's the company fit and the product fit in the new vertical. Okay, so the product, and we actually we have a little system where you can score how well your company's product will fit, as this is as far as you can think. This isn't like crazy scientific. This is just like give you a sort of a gut check. Does this make sense? Yeah. And it was kind of like, okay, this is the product based on what we know in early discovery in this new vertical. Does it meet, not really meet, or definitely not meet sort of the needs of that market? And then the company fit is kind of like, do we, and sorry, going back to product, is like, do we need to code anything new? Do we does it have the baseline features that are required? Does the features that we do have, are they valued by that vertical? Right. These are good questions to be thinking about. And then conversely, for the company fit, it was like, is our brand recognizable in this market? Yeah. Are the sellers, like the people we sell to and the people we implement with, are they the same like as our buyer and seller profile in our existing market? Yep. And are customers referenceable into that other vertical? Yeah. And what we found overwhelmingly so we failed to try to go into K-12, as you alluded to. And when we did the assessment later, it was clear. Yeah. We had nothing going on there. Yeah. But I expanded us, not alone, I had a team, but I led this charge with my team. And we expanded into healthcare. And we were able to get there because we sort of bridged to like normal healthcare through university healthcare systems. Yep. And that was really good because, hey, we were brand recognized. Our references could talk to each other. Similar implementation and purchasing patterns. Yep. The technology was sufficient, pretty close. Needed some changes. Like we needed to code some new stuff. But it was a much better looking place to go into, and it worked.
Yeah.
But all this is to say, though, this is the kind of thing a founder needs to do. And the founder-led sale, early on, all sales are led by the founder. But as time goes on, the complex stuff, the new markets, these things that need to be done by you need to be done by you.
Yeah, I remember it from the book. It's page 82. I think it's like line 14 that it starts, and it goes on from there.
There's no way you're right.
Don't look that up.
Page 82. Bro, I know what page. It's not 82. We're talking like, we'll look this up later. I want to say like 140 to 160.
I'm pretty sure it's 82, line 14.
No way. You're absolutely wrong. Producer Graham's laughing because he knows Chris is full of hoo-ha. Okay. A couple last points. So I think a very interesting story around this particle capital, finding ways to get investment, being able to find options in other markets, like in the United States, this founder-led sales. And the one thing with her as well, though, that I just really wanted to like hammer home too, is I did get a sense of her being not only like very professional, but also having kind of some of that like baked in humility.
Yeah.
And we've been talking a lot about this. So over the past 2 seasons, a lot of our guests, a lot of the people, they come back to this notion of, I don't know everything, but here's where I can help.
Yeah.
And I think that's really the impression I got from her. Like a really fun person, and it really seemed like someone who you could work with and could help you, but also wasn't like, it must be this way. It's more like, let's find the right solution for you.
It's interesting how we finish the podcast episode, the recording, and we usually have a little conversation kind of like afterwards. Yeah. And it's incredible how you do feel that humility that they've been there, they've done that. Mm-hmm. They're not, their egos aren't overinflated and by any means. They're very down to earth, and definitely got that feeling with Jane, especially just the little kibitz after the recording the interview. So
absolutely,
it was a very, very interesting person to listen to. Yeah,
Jane Crowell, Particle Capital, awesome interview. Really, really enjoyed it. Folks, thank you so much for joining us. That's another episode of Startup Different. I am David Singleton. He's Chris. Next week we'll have another very, very exciting interview. We are looking forward to that, and we will see you then.
Hey, you made it all the way to the end of the episode. Nicely done. If you enjoyed this episode, like, comment, and subscribe wherever you get your podcasts so the almighty algorithm can help others find us. Want more from Startup Different? Check out our book, Startup Different, the myth-busting blueprint for your multi-million-dollar business. Follow us on social. We're big on YouTube, Instagram, and LinkedIn. You can also check us out at startupdifferent.com. Special thanks for this episode to Graham and our friends at Toronto Podcasts. Visit them at torontopodcast.ca. See you next week.